guys, now only 3 accounting principles are left. 8 we did yesterday, and today we are doing the accounting principle, dual aspect or duality principle. In the first chapter also we studied that this is double entry system of accounting which we are following. So dual aspect concept says that if on the basis of every transaction there will be two aspects of that transaction. One will be debit and the other will be an equal amount of credit. So for every debit, there is a credit of equal amount in one or more accounts and vice versa. That is why we have accounting equation with us, which states that assets is equal to liabilities plus capital. And this statement will hold true in all our transactions. Whatever we will be doing in accounts, at every point of time assets will be equal to liabilities plus capital. So dual aspect concept is the basic principle of accounting on the basis of which transactions are recorded in the books of accounts. The concept says that every transaction has two aspects, that is a debit and a credit of equal amount. बिजनेस में हम कोई भी ट्रांजेक्शन करेंगे उसमें हमारी ये अकाउंटिंग इक्वेशन हमेशा इक्वल रहेगी. फॉर एग्जाम्पल, लेट्स टेक सम एग्जाम्पल्स. मोहन स्टार्टेड बिजनेस by investing 1 lakh rupees in cash. So cash is an asset, cash is coming into the business. So on the asset side 1 lakh cash. Then liability is 0 plus capital because Mohan has invested 1 lakh capital. So 1 lakh will increase the capital amount. So assets is equal to 1 lakh rupees and liabilities plus capital is also equal to 1 lakh rupees. Let us take some other example, like Mohan purchased machinery for 50,000 in cash. So here both assets are coming. So here machinery will increase by 50,000 and cash is going out of the business. So cash is decreasing by 50,000. So again the equation will be equal. There is no effect on liabilities, there is no effect on capital in this transaction, but plus and minus on the asset side only, right? So every transaction has two aspects, and on the basis of that we can say that this accounting equation we have developed. Now coming to the revenue recognition concept. Revenue recognition concept says that revenue is considered as realized when transaction has taken place and obligation to receive its payment has been established. It is just like a accrual basis of accounting which we discussed, that we are not focused on when the money will be actually received or when we are actually paying the cash. When the revenue is recognized, we receive it, we consider it as an income when the transaction has taken place. हमने क्रेडिट सेल्स कर दिए, क्रेडिट सेल्स कैश हमारे पास एक्चुअली में नहीं आया है, but transaction has taken place and the other person has become obliged to pay us the money after the time period fixed by us. So we will recognize that revenue on that particular date, right, by credit sales. So that is known as revenue recognition principle. Now coming to verifiable objective concept. Verifiable objective, verifiable means something which we can verify. Verify from where? From the evidences. So verifiable objective concept says that in accounting, whatever transactions we are doing, they must have some proof, they must have some evidences. That is why we are making vouchers, that is why we have bills, and on the basis of those bills, on the basis of cash memos, we record entries in the books of accounts. And the accounts which we are making, they must be free from any personal bias of the accountant. There must not be any likes and dislikes. So verifiable objective concept says that this concept requires that accounting transactions should be recorded in an objective manner and they should be free from the personal bias of the accountant. This is feasible only when each transaction is supported by documentary evidence or vouchers. We have a complete chapter on voucher, chapter number 7, in which we will be studying all the different types of vouchers. So this is what we have completed, all the accounting principles. And now I have a PowerPoint presentation. Let me show you.